Welcome to TradeTheMBI.com. This is John. This report is for the 9th and continuation of our, expected up move here as we're lead into the inauguration and general optimism. There's nothing really that has changed that, despite all the gloom and doom that you might hear about and the potential hazards. Every year you hear the same stories about the potential things that could go wrong, and those always exist. But as it is now, you have a resurgence of optimism, and whenever you have a perception, it can drive things significantly. And as I've talked about over, last couple of years, it's really been less about earnings and more about the increase in the market multiple, given the fact that the Fed has been so active. And then when you had the latest unemployment, still sluggish, and that's going to be, everyone was looking for some dramatic change, but way premature given what we're seeing. But nice turnaround in the shakeout. And this is an interesting one because oftentimes when you get the magenta and rose color up here, or red, above the 15 sell line, what you have is a continuation. And so usually when they dip down, the shakeout stays positive and it turns right back up and around, and that's exactly what it's done. Now the difficulty is that a lower shakeout at this particular point, meaning that the histogram starts to move back under the yellow on higher highs, that will be more problematic, and that will probably lead to the full retracement of these positive extremes going all the way back to the breakout move, which occurred all the way over here. Was the first red positive extreme, and that would bring us all the way back to the 22 level. So that would be a significant correction given where things are at this particular point. Here we have the NASDAQ, and it's already broken out to new highs. So now again, we're starting to get this divergence again where the NASDAQ now is outperforming the S&P in particular, and also the Dow, because you can see the Dow has not broken out into that new move as well. And also you can, very different readings from their shakeouts as well as where they are on their DOC. So really a split of money in the market. Kind of problematic as far as being able to sustain it. We had equilibrium right towards the end of the year, and now we can see fund allocations splitting back. Technology, has become favored once again. So that's the state of affairs. Now you can see the euro dipping back. It's just going to come right back and retest that again. The central banks are supporting it right around here. Takes a drive, forces short covering, and then doesn't have any real sustained strength, and it's been pulling back ever since doing that. Bonds, that breakout has moved the shakeout to a positive, which, from the depths that we were at, all this accumulation as we started to rise, and then finally explodes out of that range just for a fraction. It's not really a huge sustainable. Same thing with oil. It looks fine, and it's just been holding up, and it's been staying pretty much in this range right up here through the peaks, and that we kind of had a blowout move when OPEC was talking about its thing. And the question really is going to become about supply and whether or not there's an increase in demand. We know that there's more than ample supply regardless. And with the cheating that OPEC will do, and this is really going to be a test as to the relevance of OPEC, and that could change the dynamic for crude for quite some time. Gold, even on that breakout, it's doing fine. It's just going to be a difficult sustained move at this particular point. This is probably the early part of the breakout. I think you're probably going to see a little bit of a pullback into it, and then another uptake from it. And so looking at our 5K, you can see we ended up with the beginnings of a breakdown from a DOC standpoint. It was a bit up there with the shakeout way over the 25-point range, and then it started to cascade lower. Interestingly enough, it's held up quite nicely. We ended up with that dip that just took us slightly below, and then we ended up with our orange moving back underneath, reset for buy configuration in that, and so slight move in futures. Not overbought yet, so we still likely are going to see a retrace coming back in here, and that may happen during the pre-market, if not most likely during the market time. It'll be interesting too, because I'm working on some adjustments with the shakeout indicator that will, not on this particular view, but looking a little further back where the shakeout is negative and you tend to see some white histograms, is going to stay in the darker color to pinpoint cell moves a little bit easier, and that will get coordinated into obviously the buy sell program. So that way everything looks integrated in the same, and make it visually easy to identify the moves. And that's what we're always trying to get, is easy identification for when things have changed. So that's the long of it at this particular point. There's no short at this particular spot in the situation. We'll continue to follow it on the Skype chat and post charts. Be programming all day today, so I will be around for it. And this is what we would call post-Befana, which means kids and everyone are all back in school, and so life returns to normal for winter, though cold everywhere it seems, and that will have an interesting impact on oil prices. You might tend to see a little bit of a spike as people, well, it's cold, therefore everyone's going to be using heating oil and that, but yeah, that trade was a while back, so don't fall into those kinds of things. As always, trade well. We'll talk again later.